What is the stock market? Well, first, we have to understand what stock is. Stock is ownership in a company. Stock is sold in units called shares. In the old days, stock came in beautiful paper certificates. Nowadays, it's pretty much all electronic. Why should you own a stock? You can make a lot more money owning stock than putting your money in a savings account. The stock market has gone up an average of 9.8% a year over the last 40 years, way more than the 1% you might be earning in a savings account these days. There are two ways you can make money with stock. 1. The value of your ownership goes up. Let's say you buy one share of your favorite company's stock for $50. The company then grows and becomes more valuable. That one share is now worth $60 and you can sell it to make $10 profit. Or you could hold on to it thinking it might go up even higher. Of course, it could go down. If you sell it for $40, you'd lose $10. 2. Some stocks offer dividends too. Dividends are a company's profits that some companies distribute to their shareholders. This is cold hard cash you get just for being a shareholder. So back to the point. What is the stock market? Well, the stock market is where stocks are traded. Stock isn't sold at a fixed price. The stock market is a giant auction with prices constantly changing due to supply and demand. When you buy a stock on the stock market, you aren't buying it from a company. You're buying it from an existing shareholder. Likewise, when you sell your shares, you're not selling them back to the company. You're selling them to another investor. There are two types of investors in the stock market: long-term investors and short-term investors. Short-term investors have to invest with the right stock at the right time. Long-term investors invest with the mentality to let the money grow over a long period of time. Say this is Company X's growth from the last 10 years. A short-term investor would have to watch the stocks very carefully and buy and sell the stock at the perfect time. But for almost everyone, doing this will not be as perfect because there is no way to know exactly when a spike like this is going to happen. The long-term investor would invest knowing the stock would go up and down, but over the long period of time, he would make a lot of profit. I highly recommend investing for the long term because it lowers the risk dramatically and it can still make you a lot of money. Also, most short-term investors end up losing money because they trade so often and end up making mistakes. Okay, so let's start talking about how to choose what stocks to invest in. Here are a few investment approaches. 1. Buy what you know. Being a customer and knowing your company's products can give you a big advantage. 2. Buy what you think is undervalued. Maybe your favorite gaming company is coming out with a game that you think is going to be a blockbuster, or a stock you've had your eye on tumbles 10% due to some bad news but you think the market overreacted. 3. Diversify. Buying a mix of stocks will allow you to have a better chance of making profit while managing risk. 4. Invest in a fund. A fund is a collection of stocks. Investing in funds is less risky than investing in stocks because if a stock falls, it's not as dramatic as the other stocks will average it out. In summary, buy a mix of stocks. Consider investing in a fund. Invest in stocks you know or think is undervalued. And invest for the long term. If you want to learn more about the stock market, learn.stockpile.com is a good place to do it. The link will be in the description. Thank you for watching. If this helped you, please leave a like, and remember to subscribe for more straightforward videos.